I think that when people hear investment banking, they just hear, well, my client's not interested in selling their business right now.
At a rudimentary basis, right? Most investment banks, if they try and teach advisors how to interact with investment banking, and we were like this a decade ago, they teach them basically two questions, right? And they're good questions. Are you within 2 to 3 years of looking to sell or transition all or a majority of the business? Or do you have all the capital you need to grow to your full potential?
Welcome to Advisor Talk with Frank LaRosa, brought to you by Elite Consulting Partners. It's the only podcast offering unfiltered guidance and the direct advice for all things concerning financial advisors, RIAs, and the practitioners in the wealth management business. And now, welcome to the show.
Hey, everybody. Welcome to Advisor Talk with Frank LaRosa. I am your host, and today I'm joined by Ken Grider. He's the Senior Managing Director of Investment Banking at Raymond James. Ken, welcome to the show. How you doing?
Frank, happy to be there.
Awesome.
Good to see you.
Good. So for those of you that follow me and listen to me, you know that I'm a big proponent and talk all the time about advisors growing their businesses and thinking bigger. And what do you want to be when you grow up? And I ask all these different questions. And one of the areas that I try to have my clients focus on when we are in the process of making a move, because that's the best time to not reinvent yourself, but sort of rebuild the model that you've always dreamed of and do things that maybe your competitors aren't doing. And one of the areas that I always come across that fascinates me is investment banking and working with business owners, since the majority of the wealth in the country is controlled and owned by business owners. So if I was a financial advisor, I would want to figure out ways to only work with business owners because that's where all the wealth is. The problem with that is, and Ken, you'll get into this, is a lot of business owners, a lot of their wealth, the majority of their wealth is tied up in their businesses. And many times it's illiquid. And so for you as an advisor, if you can figure out how to tap into solving that problem for clients, you become a tremendous resource for your clients and people in your marketplace and attorneys and accountants and centers of influence that all have the same problem working with the same clients. And Raymond James has a unique offering where they I'm not going to steal Ken's thunder here, but every time I go to a meeting and I meet with and I bring our clients down to Raymond James to a home office visit, I always make sure Ken's department is, either Ken or Ken's group is in the meeting because this is a game changer for most financial advisors. And that it's how to tap into investment banking and take advantage of the relationships that maybe you wouldn't be able to take advantage of if you were at a Merrill Lynch or a Morgan Stanley or a UBS, and you're dealing with a client that has maybe a business that's not worth $1 billion, right? Maybe it's only worth $50 million, $80 million, $150 million, but you have the relationship, you just don't know how to leverage it. So I've been asking Ken to be on the show for a while. Just finally got our schedules coordinated. To talk about a topic, you can hear my voice, that I'm very passionate about. And again, I've told my clients, if I was a financial advisor in today's marketplace, this is all I would be focusing on. And so with that said, Ken, maybe just talk about, what it is you do at Raymond James and really how does this resonate with financial advisors, and then we'll get into the investment banking component of it and how this whole thing started. And if you could frame the conversation, because we're going to go a little bit longer than usual. So for my audience, we usually keep to about 45 minutes. So this is going to be a two-part series because there's a lot to unpack. It's really, if you're not, whatever you're doing, if you're driving a car, you need to stop. You need to be taking some notes here because this is going to be very impactful to those advisors that want to lean into this and bring it back to their business. So Ken, with that said, tell us a little bit about what you do at Raymond James and why it's been so impactful.
Well, you're so kind. First off, Frank, I want to say thank you for having an investment banker on your show, right? That's kind of step number one. And second, what we're going to talk about is the greatest single overnight success that took 16 years, because that's ultimately how long I've been at the firm. But from a culture perspective, you got to understand Raymond James. It's this very special culture that has some uniquities already in it that people already know, right? It's a client first environment. advisors own their own books. I mean, this is the one firm, if an advisor is here and ever decided to leave, the firm would help you move. It's very unique in industry. So that's the culture that's in play. And what I'm going to first say is everything I'm going to talk about, I cannot take credit for. I mean, this takes a massive village, right? And it takes a culture like Raymond James to really allow this to have evolved to where it is today. But understanding that, you look at the environment and say, wait a minute, Raymond James, for all it is, an amazing wealth advisor channel. Did you know we have one of the largest, if not fastest growing middle market investment bank out on Wall Street, right? And certainly the largest middle market investment bank that has a financial advisor channel the size of Raymond James advisor channel attached to it. So that started really the engine spinning years ago, right? The first thing we did was say, let's take this culture for a spin and let's fix what we thought were a lot of the problems facing firms that are trying to create this great synergy or relationship between investment banking and private client. So we went to work. We polled people. We talked to people. What are the problems? What's disenabling these relationships and achieving their full potential? And here's what we heard. We reach out to the investment bank. We don't get a call back. We reach out to the investment bank. They say they already know the company, right? We reach out to the investment bank. They take my lead and they engage my client. But it's hard to know what's going on. I feel like I'm on the outside looking in and I want to be part of the team, or the transaction closes. Maybe there's a struggle to get paid, or how about this? I don't get invited to the closing dinner, right? This is Raymond James culture. Let's fix all of that. Let's make sure that advisors get calls back. Let's make sure that our bankers are respectful of the relationship. Let's make sure that they're part of process. Let's make sure hey, how about this? Even get invited to go to closing dinners, right? So we thought, let's solve all that and let's broadcast that to the advisor corps. And so we did that. And we said, now the calls will come in. We'll start building these relationships and working on things together. To our shock, though, how about this? The calls didn't come in, right? Even though we broadcast all that, the calls didn't come. I mean, there were some, but ultimately it didn't get to where we thought it could get to. And we said to ourselves, what is going on? So based on some more research, we found out two things where there were two dynamics working together. One was, hey, to be possibly interesting to the investment bank, probably from the advisor perspective, this is one of your more valuable clients or prospective relationships, right? So you want to be careful. You want to be careful with that, right? Frank, you want to be careful with that.
Yeah, they're very skeptical about introducing anybody to their best clients.
Oh, you got it. You got that straight. I remember, I'll even back up. When I proposed what we're going to talk about as we move through this program, I made a management presentation to Raymond James and the executive committee. And I went into this meeting suggesting we have an incredible opportunity, given our culture, to build the really first totally operational, synergistic IB, investment banking, private client relationship. And I had brought some magnets. They were little magnets I brought into the meeting. As I'm talking to the executive committee, I'm sliding two magnets to each person. They couldn't figure out what's going on. And one fella, who will go unnamed, basically said, Ken, we've tried this, and it's just the bankers and the advisors, they're different, right? And it was the perfect segue. And it was like he pitched me a slow pitch softball because I said to this person, I go, that's your perspective. My perspective is quite the opposite. I believe that they're actually very much the same, right? They are A personalities, they are entrepreneurs, they are very protective of their relationships, and trust has to be earned. And so I had these people take these magnets, and you know how they're the same magnets, but you can reverse polarity, where you can actually put them on the table and you can make one push away from each other if you push toward it. And I said, that's what you just described. But I said, but hang on, pick one magnet up, flip it over, and just get it close to the other one. And they flew off the table. And I said, here's the thing you need to understand. They're alike, right? They're both taking care of relationships. They're trying to manage it through the growth cycle. They're trying to maximize value, and they're trying to drive toward optimal outcomes. What I suggest to you is, do you try to pull those magnets apart? It's hard, right? What I'm saying is, if we can make them see they're stronger together, it's going to be hard to pull them apart. And that was kind of the catalyst to get the program started, right? And then we said, let's look at education and different programs we can provide to make advisors both confident in introducing investment banking, but also give them the knowledge to not feel uncomfortable engaging a business owner in substantive business conversations. Right? That was where it started.
Yeah.
But then came the problems in that there was no off-the-shelf learning that existed to teach financial advisors how to essentially become, almost a deputized investment banker. It didn't exist, right? And it was fascinating for me as I learned that CE in general, as it relates to business development activities, doesn't give credit for that type of activity. So there was nothing off the shelf. So we had to create it. And we said, what type of knowledge would be beneficial here? Well, mentoring and learning from our advisors that are the most successful at this already. And then you had to play into the world of law firms, accounting firms, private equity firms, tax mitigation strategists, specialists, right? You had to create a learning program that would essentially not teach advisors how to actually do transactions,
Right.
but as it relates to engaging a prospective or a client business owner in their goals and objectives for the business, reading financial statements, at least at a high level, to pull out what would be meaningful for a conversation, to understand, we're not trying to make them attorneys, but from a legal structuring perspective, are you structured as the right type of legal entity? Is your legal house in order? And when to involve these different types of professionals, right? Because if what we found, and what was very counterintuitive to many advisors once they start leaning into this learning this business owner conversation, was that it was far easier, right, than they ever thought was possible. And what I mean by that is, you have a high net worth. Let's move out of clients. Let's talk about prospects, right? A high net worth prospect, they have an existing advisor, right? But you want to build relationship. They're at your club. You're interacting with them. You want to move that person to your world. And maybe in your heart of hearts, you believe that, man, if they would move to my world, I think I could create a better environment for them. But to try and sell that can, in a lot of cases, sound like motherhood and apple pie, right? Especially when you want to dig right into your personal wealth, your personal worth. What are you invested in? How
Yeah,
can
because
I get it?
you as an advisor, you don't want to throw another advisor under the bus professionally, and you certainly don't want to win the business by saying, I'm going to get you a better rate of return on your portfolio, or I'm going to charge you less, right? That's just not a good way to start a relationship with somebody. So having this value add is really important.
Well, that's it. And there's a book called Blue Ocean Strategy by Kim, right? And he's like, if you want to go fishing where the other fishing boats are, right? I think statistically, around 30% of high net worth business owners that have advisors don't feel their advisors are capable of helping them properly plan for or execute, something meaningful for the business, like a capital raise, properly planned for a sale. And we looked at that as a firm and they said, wow, and we've got the only middle market investment bank of our size tied to a financial advisor. Let's do something with this. So I want to get to the program in a little bit later, how we built the pieces of this that folks plug into. But that was really the goal of it, right? Because I will talk to, in my teams, you said, when you have someone taking a look at maybe thinking about, from an advisory perspective, where they want to park their reputation, their business, right? What I always say to people is, listen, change is hard, right? You're making a decision. I'm going to move my business. I'm going to start my business somewhere. When does that make sense? It makes sense when the environment you have the ability to go to can create potential. And I'm talking about potential delivery value to clients exceeding where you are right now, potential revenue growth and growth in your practice greater than where you are right now. How about this? An ability to have fun again and enjoy riding the tide of what are these business transition expectations. I think PwC did a report and they said there's 18 trillion. This is PwC's number, not mine. 18 trillion in private businesses in the US, 14 trillion are expected to trade in the next decade, right? So you've got this amazing wealth capture opportunity, or let's just call it value transition opportunity. And wouldn't it be fun to participate in that? And I'll kind of end and want to kind of move this along for you. But what we got to was advisors trying to enter the door through wealth management. Once they got even reasonably confident in engaging as a business owner around the business, it could be difficult to get them to be quiet, right? Oh, wait, you want to talk about my business?
Yeah.
Yes. Like, what are your goals and objectives? And are you optimally growing it, do you believe, to its full potential? We, with a village of people at our firm, different professionals in our investment bank, we help opine and react to just growth strategies. Our firm teaches us to use our investment bank not so much as a change or transaction agent, but as a business planning resource. Right? You've got to understand that's a big deal.
Right. So we're not just talking about the sale of the business, because most advisors fail to understand that they need to build that relationship years ahead of potential sale. So that, because what drives me crazy, and I have two clients right now that are dealing with this, and they're getting money from one of their clients. Like, one is like 30 million, one's maybe 50 million, and they're on the receiving end of it. And I was like, imagine you were at the beginning of that process. Imagine that you were involved, because the 30 million you're getting is not all of the money, right? He basically piecemealed out some of the transaction money that he got, right? And I was like, that's why I'm trying to explain to you, this is the service that you need to be focusing on, because that's your world. The problem is you're an afterthought of your business owner clients. Like, they've done everything without you, and they say, oh, by the way, here's 20 million or 30 million, you can run this money. But somebody else made a lot more money on the transaction and helped that advisor, and you need to learn how to get involved in that relationship 4, 5, 6 years ahead of time about these other things. And that's where I, maybe just go through what you're talking about is what are those other things other than the transaction itself? Because I think that when people hear investment banking, they just hear, well, my client's not interested in selling their business right now.
At a rudimentary basis, right? Most investment banks, if they try and teach advisors how to interact with investment banking, and we were like this a decade ago, they teach them basically 2 questions, right? And they're good questions. Are you within 2 to 3 years of looking to sell or transition all or a majority of the business? Or do you have all the capital you need to grow to your full potential, right? Those are 2 quick and dirty questions that are going to give a sense of if the business owner has any sense of something they might or could want to do with an investment bank. The problem with those questions is it's binary. The answers are yes or no. They either know if they need capital, they don't, or they've absolutely made the decision that in 2 or 3 years I'm going to sell or not, right? The teachings and where we got to in our programs is, man, we don't even cause our advisors to lead with, are you thinking about selling? We lead with a growth conversation, right? Are you growing it to its full potential? Do you believe you're growing it optimally relative to where the market is rewarding value? Are there strategies or opportunities relative to acquisitions, making hires, new products or services that maybe the best companies in your industry are deploying, but maybe you're missing? How about a resource to help you think through all of that? Now, what's interesting, it's dangerous, right? There's power, right? With great power comes great responsibility, right? We love that quote, because once you start a business owner thinking about the growth opportunity that they're not realizing in their business, you've opened up a spigot, right? Because comfort becomes the enemy of progress. How many businesses have gotten bigger than the owners ever thought they would get them, and they're making $3, $4, $5, $6 million, right? But there's all these ideas they have in their head, like, okay, I've never done acquisitions, but to grow, I really need to make acquisitions, or we could double or triple the sales force. But sales force people are hard to hire. So myself and Bob and Sally do sales, right? But if you can get a business owner thinking about growth, you might even change their sleep pattern, because now all that growth that they weren't going to realize because they were comfortable, you're starting to be there with a story that maybe it is achievable. And when I mean achievable, what I'm talking about is DIY, do it yourself, right, with the right banker and right working group and professionals around you, if you can make your list of growth ideas, let's work with a team and figure out how much capital, what you need, and let's build that plan and try and help you get there, right? Now, also very popular these days when they write that plan out on paper, it's like, wow, I'm going to have to do acquisitions. I'm going to have to use outside capital. I'm going to have to double or triple my infrastructure. Wouldn't it be great to have an institutional partner, private equity or something like that, to maybe monetize out a piece of the business now, right? And then share that risk, but they bring all the expertise that I don't have. Like they wouldn't have wanted to, and they couldn't have started my business because you can never eliminate startup risk. But hey, for where I've got it, they could be exceptional in growing it to the next level and let me de-risk now, take some chips off the table now, and create a value far in excess of what I could have got to on my own. My point to you, Frank, is that if you want to draw these business owners into conversations, growth is a much better door to accomplish it with than are you going to sell yes or no? And we hear from the advisors, it's like, we've started to get comfortable having these conversations, and the business owner, prospects, or clients are blown away, and they always look at us and they say, "Wait, I thought you were a financial advisor." And the financial advisor says, "Well, I am, but you asked me what I do." Right? There's a difference.
So I think that that is very interesting because so if I'm an advisor and I'm hearing this right now, what I'm hearing is, wow, Ken, that sounds really cool. I have no idea how to have that conversation because I don't want to sound like I'm an idiot. And what happens if my client says, yeah, that sounds great. How can you help me? Right? That's where, when you go back to the original point, why there's this disconnect, right, between the flow to investment bankers, because it's just like insurance, it's just like lending. A lot of advisors don't want to have those conversations because it's complex. They don't want to ruin their relationship. They don't want something to blow up. They don't want to introduce their client to some other person, and then it's taken away from them, right? But all of it really comes down to their lack of confidence in themselves about the topic, right? So I don't know if this is a good segue or not, but every time I've sat in a meeting with you guys with a client, like I'll give an example. I had a client. We were down there a month or two ago. You weren't in there. I think you were away or something. But one of your people from your team was in there, and this was an advisor that was on the tail end of his career. He's the principal of the practice, but he's the man in town. He knows everybody. He knows every professional in town, and I specifically asked for this topic to be on the calendar, on the agenda, because I knew there's opportunity here. He's gone from basically saying, I want out of the business in 3 years, to maybe what I really want to do is I want to be out of operating the wealth management business in 3 years and just focus on this, and just focus on bringing in these relationships that he's like, I know everybody, right? But I've never had an opportunity to go and talk to, the owner of that law firm, or, my buddy down the street that owns a tile company, right? I'm using tile company because I know that one of your largest transactions was a tile company, a tile manufacturing company or whatever, right? And by the end of the meeting, he had like a new energy in him, because he started to realize what opportunities were out there for him, and to your point, and maybe have fun again. So
no, it's like you just threw me a slow pitch softball. So let's just hit this out of the park. And at the end we can wrap up and we can talk about some results. But why is it over the course of the development of this program, I forget about many of our most successful and highest growth advisors are participants in this program and have been with us for a while. Some of our most successful investment bankers, if not the top revenue producing bankers in our investment bank, can owe that success to introductions and relationships with our financial advisors. By the way, that doesn't happen anywhere, right? So how is that happening? Well, you got to the heart of it, right? It all sounds good, but now 8 years worth of work to bring something to life that we at Raymond James, the program has the acronym name IBEX, big I, big B, little E, little X, IBEX. It stands for Institute for Business Owner Excellence. Within the firm, it's also known as Investment Banking Excellence. But the IBEX program has been a series of learn, apply. And the great news is much of the learning and continued evolution of the program itself was actually directed and guided by the advisors themselves as they grew more and more into the program and quite frankly wanted more. Right? I said that starting off, we needed a program to give both confidence that you can trust and you're okay. This is a safe space. When advisors introduce relationships to the investment bank, whatever the outcome is, whatever that interaction is, we want that business owner saying to that advisor, I got something out of that. That was nice. Thank you for doing that. Whether if it's a fit for us, one of our lower market partner firms, et cetera, that is what drives it, that outcome, right? What do they say? You do something good, they tell 3 or 4 people. You do something bad, they tell 20 people. Karma is a killer, right? It had to work from the beginning. But we said, okay, we need a program to create this deputized investment banker. The first manifestation of this, we're coming up on IBEX 6, but we threw, I believe, one of the first national conferences hosted by a financial advisory firm focused on investment banking education and business owner high net worth education for advisors, right? We did this. The first year we did it, there was no programming. We partnered with law firms, accounting firms, private equity firms, tax mitigation specialists. We built an agenda that was intense. It was going to the class. It was going to a classroom. There were no breakouts. We curated the general session list because when the advisor left after the 2.5 days, we wanted them to feel like they'd know it when they see it. They could introduce a conversation around the business, how to add value, and understand goals and objectives relative to an involving an investment bank. Right. First year we did it. I think our education people looked at it and said, "This is intense. I mean, this you're teaching. You got accountants, you got legal, you got. Are we sure we want to do this?"
Yeah.
We said absolutely. One of, if not highest rated conference ever self-reported by the advisors. We did the conference last year. 100% of the attendees worth being out of the office. And this one was designed to allow advisors to know it when they see it and be able to introduce a preliminary conversation. I want you to come this year in December to this. You have an open invitation from me.
Cool.
It's expanded to 300 plus advisors from all across the country and internationally, and just a list of some of the best private equity founders, partners, lawyers, accounting firms, just an amazing list. And then our largest universe of advisor mentors that are crushing it. A one advisor practice, they started out of our AMP accelerated learning program about 6-7 years ago. They transacted 24 businesses last year. 24. I've got lower market boutique partners that don't trade 24 businesses in a year. And that's someone coming out of the training program. So you've got advisors coming out of the training programs that are in this program. They're going right into our elite levels of chairmans and upper level type advisors, because it's like you said, the business owner focus, right? And so we created that conference. We're coming up on year 6. It's a 3-day deep dive. I mean, our heads of investment banking, different industry groups, all our head of private equity, our head of syndicate, our head of M&A, our head of private capital raise, our heads of investment banking, capital markets, all participate and present through the whole thing. And we take complex content, but we boil it down to something that resonates. It's easy to understand. I'm not saying that an advisor wouldn't understand it, but we try and put the investment banking language in advisor speak, in language that they're comfortable with, so they can parse the difference and become confident in those conversations with their own business owner relationships. So that's become the conference. It's become a not miss event for the firm. And you might say, well, you guys did it. That's great. You've got the national conference. People are excited and transactions and confidence is building. Yeah, that worked for about the first 2-3 years. And then the advisors called us on it.
Yeah.
They said, wait a minute. You've teased us with this. Well, I said, we've teased you with this. Yeah, you've made us smart enough to know when we see it. But we want more. And we said, what does more look like? And they said, no, you've got us hooked on this. We want to build our practice around this, right? We want to make.
Yeah, they're like, we're hooked. We're hooked. You did it. Now what?
You did it. Now live with it, right? We want to make the pre-liquidity middle market business owner, lower middle market business owner, that business owner that's got a business worth 20 to 500 million bucks, but hasn't pulled the trigger on their first liquidity event. We want that to be our primary target. I mean, we want to wrap our practice around this. We said, oh gosh, what is involved with that?
Can before you get to that point, I think it's important because I think this is another area of lack of lack of knowledge about what you just said, right? When you talk about valuations, an advisor here, you just said 30, 40, $80 million. They're like, I don't have any clients that have that kind of wealth, right? But you gave us a number in one of your meetings, something to the effect of a client with as little as $2 million of EBITDA is a target opportunity, right? Can you just put it into perspective of the type of client that the average advisor can go after that is down the street from them? They're all over the place, and then maybe just explain. Because you said it now a couple of times. You have your investment banking team, and then you have lower market partner firms. Can you just, before you get into this other thesis, I think this is a foundation that everyone needs to understand, that this is a much bigger market than they actually realize.
Yeah, I think people are shocked by how many businesses are in their existing universe right around them. So we're a middle market investment bank. I'm just going to be honest with you. Interesting to us are businesses in traditional industries. So let's take technology and healthcare out of it. At $7 or $8 million in, use the term EBITDA. I even simplify it down. Pre-tax income, operating income, use those as proxies. You get something that pre-tax is cranking, adjusted, $7-8 million to the bottom line. That could be interesting to our own core investment bank. Now, if you're coming from a major wirehouse or bulge firm, even at that level, it's like the floor just fell out, right? Your own home investment bank would do that. But, you kind of go down further and you get to operating incomes, pre-tax incomes, EBITDAs at like 2 million or more. They are everywhere. They are everywhere. That's why we have the network of the lower market firms. And remember, this program is for the advisor, right? It's not for the investment bank. That's when you lose, if you build a program that's self-serving. So all this education, remember I told you that one advisory practice sold 24 businesses last year. We might have sold 2 of them, right? 22, we're in that $20 to $60 million range. But, oh my gosh, as an advisor, if you're cranking that volume of those lower market deals with partners, you're still going to rule the day and be one of the fastest growing firms on platform. But it's all learning, right? So to me, it doesn't bother me if we have to go through many to get to the 1 or 2 or the few that our own investment bank can do, because it's building enthusiasm and confidence. And the advisors that are doing this are learning, right? They're becoming confident. They're knowing what they're seeing. They're putting themselves in traffic, and it's working. But for us, we have a network of lower market firms like investment banks, like many firms do, right? And then you have the core investment banking transaction, which is a mid-market transaction, right?
But you're still helping the advisor coordinate with that partner, that mid-market firm, right, in the transaction, or you're at least making the introduction, and you're educating them to stay involved to a degree, because it's your relationship too.
We're taking the time because that's paying into the system. We create the learning. If it looks like it's not for us, it's through a partner firm, we'll understand in many cases, maybe even talk to the company directly with them. If we can't profile it well enough, then we'll introduce the advisor to our bankers or the partner firm or firms. The advisors get to interview the bankers, whether it's Raymond James or the other firm, the bankers cannot go around the relationship. It's the golden rule that exists in Raymond James. I mean, you decide if, when you make the introductions, and the bankers are respectful of that. And quite frankly, now that we're 8 years into this, and I have many advisors that have multiple transactions engaged with our investment bank at the same time, but I also have many bankers that have multiple transactions engaged with advisors at this point. So the bankers are actually to the point they're protective and appreciative of the program. And that also speaks volumes. They want good experience for the advisors and their relationships. And you move further into the program, and the majority of what they're introducing us to, or they're having conversations with, it's not their existing book. I mean, this becomes the prospecting engine,
right,
for the advisor.
Yeah.
Thanks for listening to Advisor Talk with Frank LaRosa. If you're looking for more advice or solutions on any topics relating to the financial services industry, or just want to subscribe to our podcast, head on over to eliteconsultingpartners.com/podcast.